In part 1, I very clearly explained what is the black money, how it arises, what are the elements which are involved in black money, whether it is in cash or in kind, whatever the form it is. Today, I would like to give clear, understandable information regarding to the taxation, how income tax affects on these black money as well as unexplained cash investments, whatever the form in which it is. Very clearly, income tax very clearly provided 5 heads as income source for anyone who is residing in India or outside India as per Income Tax Act 1961. First head is income from salaries. Second head is income from house property. Third head is income from business and profession. Fourth head is capital gain. And fifth one is income from other source. That means the income which arises other than the 4 heads previously what I have specified. These are all taxable incomes. On the other hand, agriculture income, which is a separate aspect, it is not taxable income as per Income Tax Act. So it is the way in which income arises in the hands of a particular person. So that it is very clear that whatever the income arises out of these heads, taxable as per the provisions stipulated within the year in which such income arises or accrues. So that whatever the income arises from these sources, after paying the taxes, if tax incidences arises, to the extent of available resources after making investments or certain investments which are allowed tax exemptions, tax deductions, after considering those investments, whatever the taxable income arises to the extent of such portion in a particular year in which such income arises shall be paid tax as per the income tax rules provided in that particular year. So after paying these income taxes out of the taxable income arises, whatever the sources available to the person who paid the tax for the year or years together can be utilized for his livelihood purpose, for his family expenditure mitigation, for his personal expenditure, as well as other expenditure, whatever he wants for his convenience. But the amount which is payable tax but not paid is called black money or undisclosed income, undisclosed investments, or other forms, whatever it is. I want to go in detail step by step. First, the person who arises taxable income, he didn't pay any tax regarding to his previous in which such income arises. He used such amount for his investments or kept in cash balance, even for his convenience, whatever the expenditure he incurs, all these are comes under the purview of tax at the time of which identified by the assessing officer. So that is one case, the person who has a taxable income but not paid any tax, and some other people who has a taxable income but they pay tax for some extent of his income, some extent he may undisclosed, or he may not allowed to show to the income tax department in his income tax return. So to the extent of such portion which is not disclosed is also part and parcel of black money or investments, whatever made out of those resources also part and parcel in black money. And another person, that person who has exclusively agriculture income, but he doesn't have any other source of income, so he fully exempted from tax purview on his earnings. Out of such earnings, he can use it for his family expenditure or other expenditure as per his convenience. At the same time, he can make investments out of such income. But whatever the investments, even though a person who has a fully agricultural income, even though he has fully agricultural income, whatever the investments he made, which makes a sources to generate some income, if such income is under taxable limits, any of the heads what I have specified, definitely he also comes under the purview of tax net to the extent of such investments from which income generates. So it is very clear how income arises, how a person should pay tax, what extent he can make investments, how much amount he can kept as a bank as well as cash balance. It is very clear. If anyone under these categories, whatever I explained regarding to the person who earns incomes, if any person holds unexplained cash, under section 68 of the Income Tax Act very clearly explained, the person holds any cash, he is unable to explain from which source it comes into his hands. If assessing officers feels unsatisfied, the answer which given by the assessee also considered as unexplained cash portion. That means source should be there. Explanation given by the assessee to the officers shall be justifiable. If he fails to do so, definitely that will be considered as taxable income of the year in which such unexplained cash credits exist in the books of accounts. And then section 69, it very clearly explained unexplained investments. What is the meaning of unexplained investments? Is any investments, whether it is gold, jewelry, land, building, whatever the investments, shares, whatever it is, investments if he made, such investments not given particulars to the income tax department, or he is unable to explain the source from which these investments made, definitely that also be considered as the income of the year in which it was noticed. And then unexplained money, the money which he holds as cash and bank, he is unable to give explanation regarding to that money or cash source from which it generates. Under section 69A, it is very clear that also considers the year in which it is available to the assessee. It should be considered as income of that year. And then section 69B very clearly explained that amounts or investments not fully disclosed, that means the investments or the amounts whatever is available, partly disclosed, partly not disclosed, means the portion for which it is not disclosed, source of such investments or amounts of that part shall be given to the assessing officer. If the particulars given by the assessee to the assessing officer makes dissatisfied the assessing officer, definitely it also be considered as income of the year in which it identified. And 69C very clearly explaining unexplained expenditure. Whatever the expenditure which incurs by a particular person in a particular year, source of incurring such expenditure is unable to explain by the assessee to the assessing officer. Definitely, such income, such expenditure also considered as the income of the year in which that expenditure is identified. Even any source explained by the assessee to the assessing officer, if not satisfied by the assessing officer, definitely that unexplained expenditure also considered as income. So it is very clear that whether it is undisclosed cash credits, undisclosed investments, undisclosed money, jewelry, gold, whatever it is, amounts and investments partly not disclosed, any expenditure for which he is unable to explain the source. These are all important things kept in mind at this juncture because of this demonetization process. It is about income tax department keeping eye on each and every person whose income exceeds 2.5 lakh. If these people who has income above 2.5 lakh, if income tax department serve notices, if these things not explained properly, or if they unable to give particulars for which source of income from which these things arises, automatically